It always starts the same way. A new idea, easy money, the feeling that this time, the rules don't apply. And it always ends the same way, too, in ruin. Nearly every financial bubble in history followed the exact same 5 stages. This is how. In the 1970s, an economist named Minsky mapped the anatomy of the boom and bust. He found 5 stages, repeating across centuries. Displacement, boom, euphoria, profit-taking, and panic. Once you see the pattern, you can't unsee it. Stage 1. Displacement. It begins with something genuinely new. A breakthrough technology, a falling interest rate, a market that didn't exist yesterday, railways, the internet, housing so cheap that borrowing feels almost free. The opportunity is real at first. In this stage, almost no one is paying attention. Prices drift upward slowly. The early buyers are quiet, careful, and well-informed. There is no mania yet, just a small crowd, noticing that the ground has quietly shifted beneath their feet. Stage 2. The boom. Credit expands. Banks lend more freely, and money floods in. Prices no longer drift, they climb. The story reaches the newspapers, then the dinner tables. The asset that nobody wanted is suddenly the only thing anyone talks about. Now the crowd arrives. Your neighbor is making money. A coworker quits to trade full-time. Every gain pulls in 10 new buyers, and every new buyer pushes the price a little higher. The engine has started to feed itself. Stage 3. Euphoria. Caution is thrown to the wind. Prices detach from anything real, and 4 dangerous words begin to circulate. This time is different. People buy, not because a thing is worth the price, but because they're certain someone else will pay even more. Holland, 1637. A single tulip bulb sold for 10,000 guilders, the price of a grand house on an Amsterdam canal. A skilled worker earned about 300 guilders in a year. All of this for a flower. That is what euphoria does to a price. The year 2000. Companies that had never earned a single cent were worth billions, simply for adding .com to their name. The Nasdaq had risen 600% in 5 years. Almost everyone sensed it couldn't last. Almost no one sold. Stage 4. Profit-taking. The smartest money in the room, the people who got in first, quietly begins to leave. They sell into the excitement, while the headlines are still glowing. To everyone else, nothing looks wrong. And that is exactly the point. Small cracks appear. A loan goes bad. A famous investor cashes out. A number misses. Each one is easy to ignore on its own. But the new buyers are running out, and a market that needs fresh money just to rise has quietly stopped finding it. Stage 5. Panic. The reversal comes fast, faster than the climb ever was. One trigger, and confidence evaporates. Falling prices force selling, which forces prices lower still. Everyone rushes for the same narrow exit at the very same moment. October 1929. The American stock market, after a decade of soaring, finally broke. And it kept falling for 3 long years. From its peak to the bottom, the Dow lost 89% of its value. A fortune erased almost to nothing. September 2008. The bank Lehman Brothers collapsed, the largest bankruptcy in American history, as a housing bubble built on bad debt gave way. Global markets fell by more than half. This time, the bust was worldwide. The exact instant the mood flips even has a name. The Minsky moment. The point where confidence turns to fear, and the people who borrowed to buy are suddenly forced to sell. It never rings a bell to warn you. It simply arrives. So why does it keep happening? Because a bubble isn't really about markets. It's about people. Memory fades. A new generation arrives, certain the old rules don't apply to them. Greed outruns caution, until fear finally catches up. The warning signs rarely change. Borrowed money, everywhere. Ordinary people quitting their jobs to speculate. Experts insisting that old valuations no longer matter. And that phrase again. This time is different. When you hear it, the clock is already ticking. Displacement. Boom. Euphoria. Profit-taking. Panic. The same 5 acts, on repeat, for 400 years. The question is never whether the next bubble will come. It's whether you'll recognize which stage you are standing in. So, which bubble do you think we are living in right now?